Hello everyone, welcome to the channel of Virtual Learning Hub. I am Debitvscredit and I was discussing about cost of capital, and in previous video we understand what is historical rate of return method and what is dividend price ratio method. In today's video we will discuss about dividend growth model. So before understand what is dividend growth model, we need to understand first what is growth. Now, suppose in 2015 and 2016 the dividend is 10%. In the next session 2016 and 2017 the dividend rate is 12%. 2017 and 2018 the rate is 15%. 2018 and 2019 the rate is 20%. 2020 and 2020 the rate is 22%. Here we need to understand what is growth in this rate. So 2015 and 16 is the base year for 2016 and 17. So what is the growth for 2016 and 2017? The base year is 10. The increasing value is 12 minus 10 into 100. And for 2017 and 2018, what is the growth? Here the base year will be 2016 and 2017. So 12%. What is the growth? 15 minus 12 into 100. And what is for 2018 and 2019? The base year is 2017 and 18 as 15%. The increasing value is 20 minus 15 into percentage. And for 2019 and 20, what is the base year? 20. Increasing value into 100. So if you calculate it, so 2 by 10 into 100, so which is 20%. So if I describe it in detail, you can see how the growth we can realize for the first 3 years as 20% growth is 5% to 25%, from 25% 33%. So this is about 8.3% rate. Now here in 2018 to 2019, this session to this session 2019 and 2020, how the growth is in downward as 23.3%, as 23% is in down growth. So the growth is upward here, and here is the downward. So this is a concept about dividend growth. So if the dividend is growing, the earning per share will be grow. So in case the dividend is growing, so in case in which company the dividend is growing, you need to choose this particular company. But suddenly we can see how the growth is in downfall. So there may be a several reason for that downfall. I am not going to discuss it, but in numerical I want to discuss how the growth is upward and downward. So in dividend growth model method, if we want to calculate cost of equity as KE, the formula is KE equal to D1 by P plus G. So here KE is as cost of equity, and what is D1? Which is D0 into 1 plus G. G is represent as growth. Now what is the value of D0? Which is the previous year dividend. So if we want to calculate this present year dividend, so we need to accept the previous year dividend as base, and we need to add the growth as D0 into 1 plus G. So here D1 as expected dividend, per equity share, at the end of the year, S which is the present year, and D0 previous year's dividend per share. And G is represent as the growth of the dividend. And what is P? Which is current market price per share. So this is the formula for calculate cost of equity on the method of dividend growth model method. So with a small numerical we will understand it better. I am going to write the problem. You can rewrite with me. It will be helpful for you. So here is the problem. The share capital of the company is with 5,000 equity share of 10 each. The current market price is rupees 35 and the current dividend is rupees 7 per share, and the growth is expected for 5%. We need to calculate the cost of equity. What if the dividend is the next year is rupees 3? And here the important point is the flotation cost is 4%. Now flotation cost is assumed as the cost or expenses for earning the share. So we need to deduct the flotation cost from the price of the share. So the current market price as, so if we calculate this, the current market price P1 will be P0 into 1 minus F. Now P1, what is P0 as $35, 1 minus F as production cost 0.04, we will get about 33.6. So what is the cost of equity if the rate of dividend is 7 per share? So we know the formula, D1 by P1 plus G, which is D1 is equal to which is the current dividend value. If we adjust the growth and the previous year dividend, we will get the current year dividend as D0 into 1 plus G by P1 plus G. What is the previous year dividend is 7 and 1 plus 0.04 by 33.6 plus growth is 0.04. So if you calculate it, you will be get the KE. And the next situation is if the dividend rate is 3 per share. So then the KE will be as D1 by P1 plus G, which is D1 is given as 3 and P1 is 33.6 plus 0.04. Now there is a small mistake by my side. The growth rate is 5% as 0.05. Here also the growth rate is 0.05 and 0.05. So the growth is here also 0.05. If you calculate it, you will get the value of cost of equity. Now here the present rate of dividend per share is given, and here the situation is different. Here the previous year dividend per share data was given and the present dividend per share is given as 7 rupees and the growth is also given. So we need to adjust the growth and the previous year dividend per share and the present year dividend per share. Then we will get the cost of equity. So that's it for today's video. In next video we will understand with a different method which is called earning price ratio method. Thank you.